This is the chart. This is a little scrambled chart that I did. And this is a weekly chart going back well into 22. And this is where the market did come down and reach a bottom. And then we're seeing an Elliot that's formed from them.
Hey, Bob, can I interrupt 1 second? Can you explain to people who are new, we have new traders, what an Elliot wave is? So they
Elliot wave is a means of watching a stock or any entity move in a pattern that shows advances and retracements. And they're in kind of a staggered way so that you have an advance and a retracement and an advance and a retracement and an advance and a retracement. And very often these use different relationships, some of which may be virtually the same price movement for a stock advance or the same price movement for a stock retracement between each retracement. In other words, in this episode here, I'm going to show you, if you look just before 23, beginning in October of 22. Now that's way on the left side of the chart, right under Elliot 3. The market has a bottom, makes a nice move up, and then pulls back. Now, that pullback, and we'll talk about this a little later, does not fulfills a Fibonacci relationship, not the one that usually happens. And so it shows that there should be a big move that precedes this move up that goes down. And so as it happens, there is a very big move that goes up and then kind of stalls. And it stalls in a very little down move, which is right before B, right where you see that B, you'll see a little zigzag that comes down. So here you have way at the bottom, the first move up is a 1, the little move down is a 2, the last long move up is a 3, the little move down is a 4. Now you have one more wave left because there's only 5 waves in Elliot. There can be more than 5, there can be 100, but they're all groups in 1s and 3s and 5s. And so you have now the final wave that goes up here that makes it Elliot 5. Okay, now the interesting thing is when you look at stock movements, you look at it in terms of price. Now, everybody looks at ups and downs and whatever, and some people follow the moving average, and you'll see some good shows in moving average here in a little bit. But I'm looking at it in terms of price movement. So we're looking at right at the beginning of 23, which is down at the bottom of the wave 2. The price there, up until the very top here by B, where that top of that line is exactly the same as the price change from this bottom low 4 to what has been going up here for almost what now, half a year, trying to get above and beyond that Elliot Wave 5th. And it's just stymied here. Can't do it, can't do it, can't do it. So now we have to wonder what's going to happen to NVIDIA. Now, if you look at Elliot, after 5 waves, Elliot would say you should get a pullback. And that pullback often is a little Z wave, a little one like this, between B and C, a zigzag, what I call a little zigzag. Comes down, goes up 50%, and then goes back down. And that's an honest zigzag there, coming back, reaching 50% high and going back down. Now, in Fibonacci well, we'll talk about that later. It's too confusing. Does anybody have any questions? I know it's pretty hard to gather in. It's probably a whole new concept, but this isn't as clear as some are, but we're looking here at weeklies. You don't get abrupt changes in weeklies because time is spread out so much. Now you'll see these Elliot waves on dailies much more crisp, and you'll see them certainly on intraday trading really crisp when you see them. Any questions? Now I'd like to pull one more chart. Now that's just to show you that NVIDIA, even from way back in 2022, now is in a tight spot. Because what's it going to do? Is it going to break a technical? See, these fellas here, when it got up to this D, boy, did they, big money got on that. See, they recognized Elliot. Went up, back up, boy, they hit it again. And now it's just hanging because it really didn't convert back down right there where some traders might have thought, yes, it would. It came down, went up, boom, it should have gone back down, but it didn't. And so it's hanging. It's just hanging there. Now, on the day-to-day matters, it's not quite, you could still trade it on an intraday trades that you can make, but long-term trading on NVDA, you're at a risk here. Now, let's see if I can bring up something else. Yeah. Let's see. I'm locked out here a little bit. I'm going to try to maneuver a chart here. Oh, in the meantime, what I'd like to do is show you this from what Bob was saying. Yeah. Yeah, that's the trouble with my charts. Wait, let's see if I can get a chart here. I had this locked in a little earlier and then I lost it during the meeting. No. See if I can bring up another one. I'm sorry, I just can't bring it up. What I wanted, well, we had a much better chart to show you. Video. Now, wait a minute. I had these locked in earlier and somehow during the meeting, I've kind of lost them. I don't know why.
But we can see on your chart where your line A to B is equal to the line C to D.
Let's see if I can. Okay. So, what do I do with this thing? I'm sorry. It's not going to work.
You can expand it on the right.
What I'd like to show here is from a low. I had a chart here that showed a low over, you see my arrow? No, you don't see my arrow. A low that begins on the left side of the chart goes up, and this bottom comes down to form a 786 Fibonacci trade. In other words, Fibonacci is a method of mathematics that uses the integers 1, 2, 3, 5, and in each case then you add the integers 3 plus 5 goes to 8, 5 plus 8 goes to 13, 8 plus 13 goes to 21, and so you add each integer to the next integer and you'll get a sequence of numbers. Now those numbers come out in decimals, and the numbers 0.382, 0.618, 0.786, 0.886, and then ones, 1 plus 618, 1 plus 786. Things like that come out and show the various differences of the movement from one wave to another. So from this very low on the left side of the chart that you don't see, I have it in another chart, unfortunately, to show you very beautifully. This comes down to a 786, which is roughly 3/4 of the move that went up. What happens with a 786 move, it'll often replace itself. It's one of the Fibonacci numbers that replaces itself. In other words, if you have a move that's come down to a 786, it may well go up to a 786, which is 3/4 of the move that came down. And that's just what happened here. All this year has the NVDA, has come down to a 786, gone up to a 786, and come back down to a 786 right through this entire summertime. And now what it's done is it no longer is going to a 786, but it did. But it pulled back and it stopped there. Now it started to go back up. So eventually that sequence had to end. And now it has gone all the way up to what is called a 1.618, which is a very major move. Now, if you're looking at all of this, you say, well, maybe this is that same Elliot wave, but no, we had a lower spot all the way down here. So this is not really an Elliot because it doesn't form what's a typical Elliot wave. So now you just have to ride it up the channel. And now that's how you create a channel. You take a line through the highs, a trend line through the highs, and a line through the lows. And you're able to get a pretty good idea of where the market movement is. Now, I could show you here in various little instances, you'll see there's a move at the very top where there's like a zigzag. Those numbers, that little zigzag, are exactly the same price change. And that comes down here to the two moving averages. Okay, now, if you would follow this along, because this chart ends earlier, unfortunately, and I don't know whether I can pull up an earlier chart, you'll find that this is one of the tops that NVDA has reached. And then he came down to exactly a 0.5 Fibonacci, which is a half of the distance up this way, and then skyrocketed back up to another top. And this was about 2 weeks ago. And what happens when a stock goes up to a 1.618? It normally should retrace 0.618. And you see, this was back in November. Now, when I saw this, I said, I expect a 0.618 retracement. That's the one thing that's good on this chart that's really an old chart. I said, it's got to now pull back to a 618, which would come almost all the way down to this moving average. Now, it has come down this far, but what happened, it skyrocketed back up to make a double top right at the level of the top. And now it has started to come down again, and it's still hanging right around that moving average, that 50 moving average. Now, where will it go? Will it go back up, or will it come down to complete the 618, which is right about 119 or 120? And that's the big thing that you don't know. But that would then complete an honest to goodness 618 retracement of a 1.618 move. And that's the interesting part of Fibonacci, so that you're using these moves as you not only have trend lines to move and follow the movement of you also have the relationship of the Fibonacci pullbacks. And at the same time, you get a chance to measure the length of the move sometimes that might well be the same and give you a target. So that so that you have a zigzag, you have a move up, you get a 50% pullback, and you get another move up. If you get a 50% pullback on a move that goes in one direction, expect an additional move going back in that direction after the retracement of roughly the same caliber in price, same amount in price. And you often then get a target. And that way you can get the best out of each and every move. I would say I have made most of my money on that very simple little move. And sometimes you can really do well in the futures, especially when I was trading big amounts in ICB and way back when. And geez, it was nice. But here you see, this is again, now if I pull back here, you'll see.
Can I ask a quick question?
Yeah.
Oh, okay. So back on the last chart, is there any way, and anyone else jump in if you know the answer? So when you see the 50 EMA that you're showing us, is there any way to know how strong a support that's going to be, like whether it hits it and bounces back up or breaks through it? Or is there any other indicator like RSI or?
Well, you can use RSI, and I have RSI, and here I have, I don't know, can you see that now? Did I move the chart enough that you can see it?
Oh yeah, okay.
There you're getting a feel for yeah, MASD, yeah, and here you're getting a chart in the RSI.
Yeah, there you go.
See, now you'll notice the highs. You notice the highs. You get a little lower high here. A little lower high here, you get a higher price, but a lower high in your RSI. Here you go.
I see what you mean. It's really in no man's land right now.
No man's land. Yeah.
Isn't that what you said earlier?
Yep. No man's land. Yeah.
Yeah.
Now, so that it's pretty tricky here to where you're going to go. And the smart thing is, if you've been trading it, get out. It's flat. Go put your money somewhere else. That's always the thing that you can do when you're in that kind of shape. Now, boom, boom, boom. What else did I want to bring up? Oh, if you see a stock, and to anybody who's trading stocks, if you see a stock and here I'm seeing the 50 moving average right here above Elliot 5, okay, on this screen. If I wanted to look for a little closer move to be able to have a moving average that follows my stock more closely, I might search for a moving average that best fits this stock. And it could be a 34. When you go to the Fibonacci numbers and you do your sequence Fibonacci, you go like 1, 2, 3, 5, 8, 13, 21, 34. Now, those are the sequences. A 34 moving average is often very nice because it comes real close to the 50, and it might give you a little start. Some of these might go over the 50, or if you had a 34, you'd be right on the knob on picking a low and getting an earlier feel than you might if you waited for it to come back to the 50 MA. It's one of the things that you learn your stock, know what kind of moving average best fits its movement. And I did that. Sometimes 21 is nice when you're really moving fast, when you're trying to day trade. But if you're doing weekly trading or something like that, you might want something a little better than 50. And you hold on to your 200 because 200 is everybody recognizes a 200.
Right.
Yep.
Would you put the 21 moving average on a minute chart or a day chart for day trading?
I would put it on a 15-minute or an hour chart.
Okay.
Yeah.
And then with the Elliot Wave that you have on here, what made you choose to put it on a weekly chart?
I was just looking for weekly, NVDA. I didn't know anything about NVDA until we really came on the meeting a month ago. And I said, well, I gotta, or 2 months ago, I guess it was. And I said, well, I gotta learn and see what's all this is happening. And then just earlier today, I said, well, let's look at it on a weekly chart. And that's when I tried to, that's why I'm screwing up all these charts. I'm trying to get this thing incorporated in that. And I look at the weekly and I said, yeah, look at this, A, B, C, D. Boom, 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 boom. Notice how it hit that second high? Really dropped like a rock. Now it came back up. And that, if you look at it on an hour chart, I think is right at the 50 of an hour chart. If you would look at an hour chart, see, this is a weekly chart, 50. If you looked at an hourly chart, 50, it would sit right under that very last doji bar, be right on that doji bar. So just to let you know where you are then when you're trading that time frame. Yep. That's about, those are about the things that important. See,
Well, thank you for sharing that.
yeah, you see why, the other thing, you say, why do you trade down? Well, look at this chart. You're gonna stay up there the long, slow, long ups, or do you want the quick downs? Sometimes the downs happen faster than the quicks, or than the ups. And if you're only trading just little bits and pieces, it's kind of fun. So you find your targets now. You see, you say, well, geez, I don't want to trade down. But look, if you would have seen a target up here when the big boys saw the targets, look at this, what you would have done, because they recognized that being a top. And then it pulled back up, and then they took it down again. So, yeah, there's a lot of trading that goes on. These guys are pretty sharp.
Wow. That was
Yeah, they are.
fantastic. Very interesting.
Yeah,
Huh. Does anybody have any questions?
sure.
Pete, Charles?
I'll tell you one thing that I do. I've had it here by my side. There's a book called Fibonacci Ratios with Pattern Recognition. It came out of Traders Press. And I don't know if you knew Larry Passavento, but Larry Passavento was one of these guys that was a little like your guy on CNBC, but he was honest. And, it's hard to find an honest trader. And anyway, he came out with this book, and it's very nice. It's simple, nice big lettering, easy reading, and it shows you some of these moves that I'm diagraphing here, just very plain and well written. Larry wasn't a brilliant guy, but he was a real good trader, and he made a lot of money. Anyway, so and he was kind of the old school kind of thing, mostly a technician, a little bit of news, but mostly technician type trading.
Yeah,
So
they have the PDF online, it looks like. So thank you.
sure.
I'll just add, I just checked after hours trading, NVIDIA was 143, and it sounds like I should get out of it.
Yeah. Chat, NVIDIA, yeah. The thing about it is, well, I don't know. The thing about it is, the target for me on the 618 was 120, 119 to 120. Now, that would be an excellent place if you wanted to go long in it, perhaps, to catch a move back up. But just to let you know. Yep, that's about all I can think of here right now.
We've also talked at our meetings about, for those who want to play NVIDIA, but cheaper, there's NVDL, which is Granite shares 2 times long NVIDIA. And that's up after hours, $2.38. That closed at 71.58. And then there's also, get up here, No. Oh, I can't remember. There's a short of NVIDIA. I forget the symbol. Yeah, here it is, NVD. So NVD, granted 2 times short NVIDIA daily ETF. That's another way to play it up or down, this case down. So if you short it, so today it closed at $26.45. It was down $1.29. And that means NVIDIA went up. And so
I
after
think NVIDIA had to go up to reach that 50. And I think it's probably just sitting right above the 50, right in that area.
yeah,
Like you say, I guess it's for a doji for the weekly, of course, but of course we're only 1-2 days into the week, so it's hard to say that. The one thing I will tell you is, and especially the rookies, but is you look at charts, you have to always be sure when you see a market move, a wave or a advance and then a retracement and an advance. Because very often you'll see an advance and you'll see a 50% pullback to half. If there is a half pullback, you can almost be assured that you'll get a move the length of that first move up, so that it gives you a target, at least sometimes, that, oh, I know where I kind of want to be when I want to get out, and I'll take my profit there. Because you can be pretty well assured, unless you get a really interesting situation like here that's going to run and run and run. And so then you'll go back and catch it. But the thing with it is you can be pretty well assured you'll get your profit and it'll probably pull back at that time. So now I have a pair of calipers, a little pair of calipers. Of course, you can buy them in a 5 and dime store, you know, and sometimes you can just do that on your screen, because sometimes, and I've looked at 50,000 charts, I'm sure, maybe 100,000 in my lifetime. I still sometimes can't see 2 moves that are exactly the same price change, but they look so different. So you can get fooled so badly. Sometimes you'd say, I would never think those 2 moves were the same price, but they were. So just a couple of notes along the way, because you can make money that way, because you know where your target is and you know when to take the trade as you get a pullback. If you're going long, you know where your target is when you want to get out, or when you want to go short, which is what I do. I look for long targets to go short, but most people don't short. All right, that's all I have to say.
well, that's terrific.
What targets are you looking at right now that look like great shorts with setups?
I don't have any right now. I'm just looking at the S&P, and I haven't looked at it today at all. I think it had a pretty good move, and let me try to think of what I saw. I don't know. Hold on. Oh, I was going to show you something here. Wait a minute. See, let me think. Can you see my screen right now?
Yes,
Can you see what I'm doing?
I see a pier.
Wait a minute now. Wait a minute.
Yeah, Euro to USD chart.
Okay, you can see that. Okay, now I want to show you a chart. Look how this is the euro. Look how it was low here. I wish I could point this out. I think this is a 1-month chart. This is dollar strength right here at the very bottom, back 1.5 inches on the chart. That's dollar strength. This is dollar weakness halfway. And now look at the extreme dollar weakness. That's what brought this market up high. Dollar weakness. That's about as weak as the dollar's been for a long time. That's what happened with Trump. He enhanced dollar weakness. This all happened almost today, over the weekend. This is the weekend dollar weakness right at the end. So you think the market's doing great? No, the dollar's getting weaker. Look how weak it was earlier. And it got good and strong there for a while, and now it got weak again. Yep, that's a hell of a chart.
So I see what you're talking about, and looks like back in August and September, it
Yeah.
was super
Yeah.
weak.
Yeah,
And so I would have to make the relationship on what happened in the stock market in August and September, because that may be a good correlation to what's to come.
yep,
Thank you.
sure.
Thank you. Yeah. Could you bring up the S&P also
Yeah,
and
see
put it
what-
side by side?
Yeah, let's see. Oh, I can't do it. Yeah, I'm no magician with a computer. That computers came well after me. But let's see what we got here. Let's see if we can come up with something else. I use stockcharts.com. I don't even use now any of the elaborate software. Stockcharts.com has to do it for me. Now here's the SPY. No, yeah, here's the SPY. Ooh, God. You see where the SPY is relative to Bollinger Bands. Ooh. Notice how the SPY came down, and came up, hit the top Bollinger Band. There still looks like a little room on the RSI. Are you seeing what I'm seeing?
Yes.
Yes.
Okay, we're seeing a bounce back. We've cleared zero here on the MACD. That doesn't really tell me too much yet. We're still, even though we're so high here, we really took a hit on this MACD, and there may be room. There may be room to go up here some more. Now I look at this as, let's see. It's hard for me because I don't know what else is happening. I guess this is a daily chart. So here again, now look at the 50 here. Oh, here's a lesson for the rookies. Notice here's a 10. Okay, this is a Bollinger Band. So in a Bollinger Band, that's the purple, or the pink purple, whatever it is. And it's a 20-day Bollinger Band, and it has a 10-day moving average right through it. So you get an idea what the 10-day moving average and how the market kind of stays right about that 10-day moving average, but in a crash will drop down to the 20-day moving average, which is the big blue one. Okay, but then it rockets back up, hits the top of the Bollinger Band, comes pulling back, gets up, and now it really takes that crash day. That was that huge day. That's the day I got out about halfway down. Oh, that was a disgusting day. I had a big, huge because of course of all this up here, way up high, and this is at about the 18th of December, 16th, 18th of December. I had a real big position in here, and I saw this big crash down, and I got out about halfway down, which is, I should have known better. Anyway, and now here you have an example of zigzag, and right through 2025 into 13, and that was just came down to the Bollinger and then went rocketed back up to the Bollinger. I would say the market is a little risky from the standpoint of the Bollinger Bands, but you see, the market can ride a Bollinger Band for a period of time, as you might seen in October. Look at October and how long it ran, and look back in September, how long it walked along the Bollinger Band on the way up. So it's hard to really, the Bollinger Bands are really good criteria down. Up sometimes, especially in an uptrend, they will run the Bollinger Bands. You know, Now, this is a great, this is again a great, to put a, can I do that? Yeah, I can do that here, just for the hell of it. Here's a great time to put a trend line. And see where you've gotten. Although we really don't have much here, we might be able to use this as a bottom. See, we've broken the trend line. Ooh, we've just come back up to the bottom of the trend line. Well, close to it anyway. Notice the last bar is just short of the bottom trend line. Notice if it goes to that trend line here, it came up to the bottom trend line and pulled back, and now it's going up to the trend line again. You might see more of a pullback. I don't know. It's hard to say.
Yeah, it looks like the upper Bollinger Band is resistance.
Yeah. And it is, it is, and it has been pretty good. There have been early along the line, it followed the bands, but as you got closer to the end of the run, it touches the band and then pulls away pretty briskly. Notice a couple big red bars right as that early December, and then it followed that big bar down. Notice how close it holds to the lower Bollinger Band. Yeah. And that's even, in Bollinger Bands are wonderful for non-trend trading. But when you have them on a trend, you got to better be careful. Sometimes the middle Bollinger Band, the little 10 band, the little notched band, is often a better way to trade a trend. So remember that. Some people use an 8-day moving average. Again, that's a Fibonacci number. 3 and 5 is 8. An 8-day moving average on the shorter term, that's a 10 there, and you see that it works out pretty well for carrying all the way up that high, except for this one period, which was in late November or late October, which was really bad. Yeah. Boom, boom. That's about it. That's all I can really offer.
Very good. We're at 9:35, so I think
Yeah.
if there are no more,
Yeah, by all means.
yeah, are there any questions? We'll wrap nicely. Anyone have any? If there are no more questions, thank everyone for coming. Please come again. We meet once a month, the third Tuesday of the month. And we really enjoyed having everyone. We hope you learned and gained something, and we'll hopefully have the recording up on our internet YouTube channel. So thank you all again very much.